So we're going to talk today about how not to get wrecked in this cryptocurrency market. Let's go. Hi everyone, welcome to the channel. If you are new, make sure you have subscribed. Hit the bell button, leave a like, it majorly helps. A lot of people in this channel are not subscribed, make sure you do so. This video might save you a lot of heartbreak because I've got basically over there 6 little things to make note of. Okay, one of them is a little bit of a prequel to a video that I'm going to do this week regarding a certain thing, which is probably obvious when you come to it. And we'll go over that in more detail. But at the moment, I want to talk about how not to get wrecked in the market. It seems quite good. At the moment, it seems great that we are all making money. It does, it feels great. However, if you're new to this space, you may not have witnessed a nuke candle, as I like to call them, where it does literally drop like a stone within a day. Can you stomach a 30% drop in a day? Got to ask yourself that question. But let's start off with the first one. This is all educational based. If you do like this content and you want more of it, please do like it. Also, check out my Patreon. I do more of this sort of stuff in there in terms of requests and a little bit of nugget gems of what I tend to do, i.e. my plans. But the first one and the most obvious one is risk of capital. We all laughed and joked yesterday about Squid Game. Not the game as in like on Netflix, i.e. the coin that was made off it. Don't do your investment advice or your research via Netflix. It's not a good look, right? Too many people are overexposed in this market. Simple as that. I know it, because you panic. You panic when you feel it is going to go down. You panic when it goes up too high. And you panic when there is those losses that do occur. It's kind of weird to say that people panic when it's going up too high. Profit taking is the most obvious thing in the world, but it's the most subjective. You've got to work out for yourself, right? Simple as that. So let's talk about it. Risk of capital. What I teach and what I do, even on learning crypto, if you want to learn courses, make sure you check on those. Always have an emergency fund. First things first, have a salary, have an income, have a cash flow, but have an emergency fund. Whether that is 6, 9 months or 12 months, up to you. And then you can start utilizing money into a market. Simple as that. The plan from there is obvious. Make money, get profit. And guess what that profit's going to do? It's going to come out slowly. And that risk off the table is going to be obviously a lot better for you because it's risk-free. If you can buy an asset low and sell it for like a 4 or 5x, and you don't even have to sell it, you can just take out your risk bag. It's risk-free. If you get to a point when you have a full portfolio you're happy with, and none of that money is at risk because it's not from your bank, it has been withdrawn and put back into the bank, and you can use that for another thing, happy days. That is what you want to do. So risk of capital is important. Do not be aping into shit coins. Do not be trying to copy others. You will lose. And more on that in a bit. Second one, the trend. The trend is your friend, right? It's an obvious one. I personally use the EMA 21. It's relatively straightforward. I'll probably put an image up here in terms of a trend. A trend is what direction of bias it is going in. Most things are going up, right? Right now, there's different caveats to certain things, including the dominance chart and other utility sort of elements of when you should be investing in terms of like flow of stable coins and stuff. There's a good time, there's always a bad time, right? Go with the market. Don't go with individual coins and assets. Go with the entire market. Right now, we're bullish, right? We've been bullish for about 2 months now. We're all making money. Overextended market. Even in the stock market, you put money in the stock market, it'll go up, right? It's because the bull trend is there. It's kind of an easy game, right? Until it's not, right? It's right until it's not. So the trend is your friend. Never go against it. Don't bother with leverage trading. There's no need to. You will always make money as an investor if you've got the right strategic planning. And that is why the likes of my Patreon group, in terms of my holds, in terms of how I do certain things, will always come apparent. And also why I have online courses to help people who do not want to do it by losing. If that makes sense. A lot of people come to me after losing a lot of money. Get the clarity of the content first before you start aping into things. It makes much more sense, especially if you have no idea what a trend looks like, especially if you don't know if something is undervalued or overvalued. Overvalued is the most obvious at the moment. But you need to start seeing your coin research elements come into it at the right time and knowing that the trend is good. You don't want to buy the dip that keeps on dipping. You also don't want to buy something that is not going to go up because it's overvalued and it's like, well, let's look at Ethereum as an example here. It's worth 511 billion. You may not get a 10x there, sadly, but at the same time, it could still go up a little bit, but not as much as what other assets will. Make sense? Cool. Next one is noise. Noise is important. I'm not talking about me talking shit on Twitter and shit posting. Did that yesterday just to annoy people, just create a bit of noise, see what happened. And it worked very, very well. My tweet yesterday, I'm selling. Everyone was saying I'm buying. I thought, let's go against it. And I got a lot of shit for it. People don't want to hear the bad stuff. They only want to hear the good stuff. The good noise is the worst noise. The bad noise is the one that you need to be aware of, because the bad noise will always bring that little devil on your shoulder back to reality of your brain. It will go, oh, hold on a minute. What? Okay, cool. I think, personally, it's too much euphoric behavior at the moment, right? A lot of people are going, I'm buying. Keep buying, guys. It's going to keep going up. Why not? No one knows, right? It's a market. Yes, a trend is your friend and all that good stuff, but there's always corrections in a trend. You've seen it before. EMA 21 slaps back, goes up again, slaps back. If you keep buying those tops at those euphoric places, you're fucked. Simple as that. Sorry, guys, but you are. And that's a problem. So remove all noise bias from your areas. So if you're constantly reading the same accounts who are constantly bullish, I'm not going to name them. There's a lot of them out there who will tell you to buy every single dip. I've seen people in the May crash telling you to buy a 60k Bitcoin. It went all the way down to 30k. Don't follow those people. You're not going to win. Buy the trend. If you understand the trend, you'll know when to buy and when not to buy. That's a top tip. Anyways, the table, number 4. The table, I've got one in front of me. It's called a desk. Computer's on it, funny enough. But imagine a table. You look at your portfolio. Imagine a stack of cash. You don't want to lose that. That is all I'm going to say. The worst feeling in the world, and I will guarantee you, you've probably all felt it before, having money on the table where you can physically go and get and touch and do whatever the hell you want with is cool, right? It's great. But if you leave it and it rots away and it sets on fire because it's crashed, it's kind of the worst feeling in the world. I've had it before. Even this year, I've done it, the exact same thing where I've literally bought something, I've not taken enough off the table, and it's left me burnt. It happens, right? It just happens. But always remember that. If you're sitting now on like a 10, 15, 20x on any asset and you've not taken anything off the table and you're thinking, what? You should be, because we all know what could happen in crypto. All of a sudden, we could just go boom. We just don't know. Realistically, you just don't know. That's the scariest part. Next one, number 5 as a pointer. Gonna do more on this. YouTube greed mentality. The YouTube shillers, I'm going to do an in-depth video about this. Now, I'm not going to reveal people specifically as individuals, but I'm going to explain what it is like being a YouTuber, i.e. what inbox messages I get every single day, a lot of them. What it's like in terms of revenue made as a YouTuber. Different YouTubers are different. I know price lists from different YouTubers because I'm often put in those emails and they reveal them, which is always good to see. I will dig a few out, which could be quite fun. Some of them earn a 5-figure sum for a shill. Mental, right? But I'll go in that in more detail. When you look on YouTube, I take the piss all the time. I do it on Twitter. I put it out there. I cannot stand the YouTube thumbnails. I know what they're designed to do. I do it myself in my own way, without using my face, without doing something over the top. But the idea is to catch your attention. Hopefully this video has caught your attention. But at the same time, though, people do it for the wrong reasons. Will make up some absolute bollocks, not even mention it in the video, and then just crack on like normal. They still get a following. These have got much more followers than me, and it's actually baffling. And I know some people agree with that as well and think, what? Why? It's crazy when you think about it. But the YouTube greed is massive. All about the algorithm, all about the views, all about getting people to click on something to get money and referrals. It is all that driven. It is ridiculous, right? However, I've said it before in the past, most YouTubers will disappear. They will go. They will vanish because they would have made a lot of money. They will not need to come back again. It's happened before in the past. It will happen again this time. Always does. Last one, and the most important in my opinion, don't be a bag holder. Don't get married to your bags. Do not get full on in bed with them even me, right? Let's look at Polkadot. You all know I like it a lot. I will still sell some. Definitely, yes, of course I will. Really? Yes, I will definitely sell some. I'm already planning to sell some of my staking bag. I will be looking to unbond a percentage of it and looking to sell because I know this market. As good as it is right now, in 2 years' time, we could have an 80% correction. That's a reality. We could. It's happened in the past. I'd rather be in cash and have a flow of USD or whatever into a yield platform such as Swissborg or BlockFi, etc., and earn money there just in case, because it's profit. It's, profit's profit, right? You can't lose. You can't go broke if you got profit, right? Having that money on the table and then becoming a bag holder is the worst feeling, because that's what will happen. Go to step number 4, the table. That can easily convert into being a locked bag where you're stuck forever. You don't want to be stuck holding because you'll lose. And we've seen it before in the past. I've been in that position before in 2017, 2018, where some of the coins that have not survived are still dead. They're not going to come back to life. Good fundamental ones, good ones with teams and stuff like that are actually working throughout bear markets will. You'll find them very, very easily. However, stuff like SafeMoon, stuff like Shiba, stuff like Dogecoin potentially could be the ones that could, without the market hype, go pretty low. And they may never recover as quickly as you expect, and holding those for potentially 2 years in a massive negative loss could be pretty horrible. You can still lose all your money on spot. Doesn't matter about leverage or not, you can still lose all your money. Cardano, for example, dropped like 97% in the last one. Yeah. If you weren't buying that dip, well, someone has. I did. It's crazy. But there you go. How not to get wrecked in the market. Simple, really. I think it is. You just need to learn it.